Hello everyone, and thanks for tuning in for another market outlook by Exness. My name is Andreas Semesokleous, trading specialist here at Exness, and in today's video we are going to be checking on a possible trading idea for the next few days, the narratives behind it, and which economic data could potentially affect this trade. But before we proceed, let's check on the performance of last week's idea. Last week's idea was for a buy on Ethereum against the dollar with a target around the 2,800 area or even higher. The idea was completely successful with the price trading currently higher than 2,900. Now for this week, we are looking at the pound-dollar pair for a potential sell trade with a target around the 1.2565 or even 1.25500 area. The price has been trading in a bearish channel formation since the beginning of the year and is possibly anticipated to continue in this formation in the near short term, especially if we take into consideration that the stochastic oscillator is in neutral levels without any extreme overbought or oversold readings. The targets of 1.2565 is the lower end of the last swing, which is possible to be retested again in the short term. The main narrative behind this idea is the weak economic data published last week from the UK, where inflation was static at 4%, unemployment benefit claims were more than double for January, and GDP declined to negative territory month over month. All this data indicated pressure on the quid, leaving it unable to make significant gains against its peers. Also, the 10-year gilts have slowed down in the last week, indicating that capital flow has lost some steam, also putting pressure on the British pound. On the other hand, after the publication of the CPI last week, the dollar gained against its peers since expectations of interest rate cuts were pushed back to June instead of the May meeting of the Federal Reserve. In terms of economic data for this week that traders will be paying attention to is mainly the FOMC minutes on Wednesday, services and manufacturing flash publications from the UK on Thursday, as well as European inflation rate the same day. So in summary, the trading idea for this week is a sell on the pound-dollar pair with a potential target around the 1.2565 price area or even lower. The main narratives are the weak economic data from the UK, the slowdown in the 10-year British gilts, and a stronger dollar after the CPI publication of last week. The economic data that could affect this trade is mainly the FOMC minutes on Wednesday and flash data from the UK on Thursday. Remember, this is not a signal, it is just an idea for a trade. It is not a guarantee of success. Always do your own research and remember to manage risks.